Welcome back to Rich Dad Stockcast. I'm your host, Denney. And if you caught our last episode, we talked about why another market crisis isn't a matter of if, it's a matter of when. We looked at the history, the dot-com crash, the financial crisis, the Silicon Valley bank collapse, same investor psychology. But today, we're taking that conversation just one step further. How do smart investors actually profit from volatility? Because while the average investor is watching the news and wondering what to do, experienced investors already have a plan. They understand that volatility isn't just risk, it's opportunity. And today, Rich Dad expert Andy Tanner is going to show us exactly how professional investors prepare to capitalize on uncertainty instead of fearing it. And before we get into it, make sure you head over to stockcastbonus.com, download your free investing tools. If you want to become the investor who stays calm when everyone else panics, that's where you begin. Andy, welcome back, sir.
Man, what a great continuation of this discussion. You know, we just really ran out of time on the last podcast, and I think it was a great audible to say, let's just do a part two, because there's so much opportunity on the horizon with market volatility. It's just massive opportunity that I just salivate over. And I don't wish ill on anybody, but everyone loves a sale, and consumers love Black Friday because consumables go down in price. They just can't wait to trade money for consumables. Investors love Black Friday or Black Swans because we like low prices on assets. And the problem is they're not scheduled. You know when Black Friday is. It's on the calendar. Black Swans aren't scheduled, so you've got to be ready when that sale is announced. That preparation, temperament, and education, those three things, being prepared, being educated, and then having the temperament to act, that little trifecta comes in handy. So we've got some more details we can talk about all day long on this stuff. We probably do 10 podcasts on this, but we'll probably get it done on this one. We'll try.
Opportunity is the key word there, right? Speaking of opportunities, stockcastbonus.com, great opportunities in there. What do our listeners receive when they go there?
Well, the issue is the people that don't go there, not the people that do. Part of the problem with human nature is preparation is not something that humans are good at. They're good at immediate gratifications, immediate urgencies, immediate. We don't have a lot of forethought. We're not designed well that way. We deal with things day to day. So when we say, be prepared, how long does it take to be prepared? That's the reason to go to stockcastbonus.com right now, because there's some learning time. If you want to have that temperament, hang out with people with the right temperament. If you want to have education, hang out with the people that have education. And those two things put together, there's preparation requires some time. If you're going to be prepared for the test, if you're going to be prepared for the competition, if you're going to be prepared for the basketball game, if you're going to be prepared to be in the outdoors when the snowstorm hits, all of those preparations of knowing how to deal with difficult times, education takes a little time. So in this context, stockcastbonus.com is really, really important, because it can help you prepare with tools that are free, and you can start there. And then if you like us, you can, get into some of our coaching programs and get some hand holding and the things we offer for value. It's a valuable thing, but we always start you off for free, because that's a great way to start a relationship. Go see what's there, free sample at Costco. Try it before you buy it.
There we go. I do love the free samples at Costco.
There you go.
Especially my son, my 3-year-old son. That's another story. But anyways, let's talk about opportunity. Let's talk about part two here. Plenty to cover. I'm just going to go open forum and say, hey, there's something that's weighing on your head that you want to talk about. That's why we're doing part two. What is it that our listeners need to know?
Okay, there's a lot of things. There's more than just one or two things. So my brother, my younger brother, he's 8 years younger than I am. I just love him. And he's a hero. Literally, he's a hero. He is a first responder. There's news articles of him as a police officer running into fires and saving literally running into burning buildings and saving families. The guy is courageous. He's a stud. You know Spencer. He's just awesome.
Love him.
One of the things he did was training. And he has only fired his firearm. Luckily, he lives in a pretty safe neighborhood. Salt Lake City Police Department, it's not like other cities. It's a pretty clean city, and we do have our homicides. He's now a homicide detective. That's what he does now. So we do have our homicides, but it's not like it's not like there's a lot of people in that part of the department. But when he was a beat police officer, he did training. And he did weapons training on a regular basis. And what was interesting is he trained for maybe 2 or 3 days of his whole career, where he had to draw his firearm and fire it in a firefight. I remember one particular time where I saw him with his AR-15 on the news because someone was shooting at police officers and they were trying to find this guy. He's in a gunfight. And that training is really important because it's only for a few moments, but they're the most important moments of his career. In other words, when the chips are down and there's bullets whizzing and he's got to make decisions, that temperament, that education, and the time to get there in preparation made all the freaking difference in the world, okay? So this is difficult education to sell to people because they're like, well, I'm not going to use it every day. The education that I usually have is cash flow education, where I teach people the day-to-day stuff, and he learned that too. But there's also a special part of education where you're training for that moment of life and death, and in our world, it's the black swan event. And I will tell you that is life freaking changing. When you get in that moment where the S&P's falling apart and Jim Cramer's on TV going nuts and the market's falling and there's COVID or there's subprime meltdown, those moments create such low prices. The prices are so low. Buffett talks about this. He calls it shooting fish in a barrel. The whole market is on sale, and the person that knows how to do this, it is life-changing. And think about this. I've been doing this for about 30 years. And the 3 biggest only been 3. That's once every 10 years I'm using these skills. But they're life-changing. The dot-com bust, sale. You've got subprime meltdown, sale. COVID, 2/3 of them, sale, right? Sale. And there'll be other ones, sale. So I can't express this enough that there's 2 levels of training here. There's your day-to-day cash flow, make the money, right? But there's different things you do that create a life-changing opportunity. I have some positions that came just even recently as COVID, 5, 6 years ago, that are just, I look at them today and I'm just like, my gosh, that was good. That was a great time, terrible for families. I had one of my best friends lost both his parents in COVID. Horrible time. But financially, you come out of that firefight with generational blessings. So that's the first thing, is understand that there's training available that's like SWAT team training, that you don't use it every day. But man, when there's the bomb threat, or when there's the earthquake, or when there's the 9/11, or when there's the COVID pandemic, being prepared, it's unspeakably important. So that's the first thing I'd say.
Okay. I have other questions, but I have a feeling there's a second thing that is lingering there that we should talk about. What's the second part?
Storm clouds. So I'll give you an example of what greed looks like. Greed is the fear of missing out on growth. So right now, here's an interesting metric that you can look at. It's called the Shiller PE Index. And Shiller is a professor at Yale, and he coined this term he wrote a book. I think it might have been Greenspan that used it, and then he wrote a book called Irrational Exuberance, where we're so excited, but it's not a rational excitement. It's just you're caught up with the crowd. That very much happened in .com. And I think AI will be bigger in .com, and I think it's easier to see than .com. We understand AI better than we did .com. But in .com, you had all these people raising money, and the speculation about the outcome was huge. And you had most of the people wipe out, and Google rises. You had the FANG trade that kind of survived it, which was great, right? It was great. And then the internet was right. It did change how we do business. It made people a lot of money. It was great. But the winners and losers were hard to pick out in the 90s, right? So in 2000, we have this big crash. Well, if you look at the Shiller is called a PE ratio index, and it's about 120 years of data. It's adjusted for inflation. And it goes back to about 1880 or, I don't know, 18 something. So maybe it's 140 years. I don't know what it is. It's over 100 years. And what it does is it simply says this: if you buy a cash flow jack in the box, let me get one. Oh, I can't reach it. But if you buy a cash flow jack in the box, you have the price tag on the box. It does the work and then spits out $1. So how much does the jack in the box cost if it spits out $1? Well, in the year 2000, it got up to 42.43. So that means you were spending $40 for a machine that made $1 a year. That means to get a full return on investment, you got to wait 43 years, like half your life, to get an ROI out of that thing, to break even, right? You're having to spend $40 to get $1 every year. Well, the reason that is many of the companies weren't earning any money in the NASDAQ, right? And that drove prices up in the S&P comparatively to where you just had incredibly expensive machines. The S&P is going to make you $1 for $43. Well, there's several problems to that. If you have a 401k, you're now getting less asset, because if let's say you put $100 in every month, well, at 20, you could buy 5 shares, but at 40, you can only buy a couple of shares. So when prices get high, you're getting less shares, you're getting less asset, and the assets are making you less money. You're paying for less earnings. So why do people do it? If it doesn't make sense to spend that much, I mean, the mean is around $16. That's the median. So usually over that 120 years, 140 years, you're spending $16 to get $1 of earnings. And all of a sudden in .com, you're 43. The reason people do it is growth. They think that the money will come, that it'll catch up, that they'll pay that $43, but in the future they'll make so much more money that it'll be worth it again. And that can prove to be true. Elon Musk, Tesla was like $500 for $1 earnings back in the day, because they were reinvesting for growth. They're spending so much money to grow and innovate, they didn't have any profits. And people said, I'll turn a profit someday. And it was a great bet. And the price and it equalized out. It did a great job. So that guessing on the future is a problem, though, because it can create a bubble. Well, the highest ever was 2000 at the .com bust. We're paying $43. We're paying 41, 42 right now. So there's only been about a month in the history where we've spent this much, and it was in 2000. So over the last 120 years, we've only been this high for a few months. We've only paid this much. Very, very rare. So to me, I say, does that mean there's a crash? The answer is, I don't know. But I certainly see a storm cloud, and I certainly see that. Then I see that the Democrats and Republicans have become one and the same as far as deficit spending. It used to be that the right was a little bit like, okay, let's be more fiscally conservative. Now they argue about what the money should be spent on, not whether we should go into debt. They absolutely want the Fed to drop rates. It's just, we're Keynesians here in the United States all the way around. So that debt, when you're looking at having to curb inflation, it's one thing to have $1 trillion deficit, back in back in the day, in Obama years, to have $1 trillion deficit. It's another thing to have $1 trillion deficit where you're borrowing money at 4% instead of 2%. And the deficit spending is so I see storm clouds, Del. I see us paying a lot. Now, Buffett said be fearful when people are greedy. I'm not really excited about buying the S&P as a whole right now because I see it as expensive. I'd rather pick and choose places like we talked in the last episode. Oh, here's a little mini crash here, pick that one up. Or here's one here, pick this one up. I'd rather do my picking and choosing right now than diversifying, because you have a few companies that are concentrated in wealth that are sucking that S&P up by average, right? A lot of losers in the S&P, I think, right now that are being compensated by some huge, multi-trillion-dollar winners. So I see storm clouds, but I also see why people think AI could be big, because it can. So right now I say, am I going to predict a boom that continues with AI, which I think is likely, or do I predict a bust because we've just gone too far, too fast, too excited? The answer is I don't know, and I don't care, because I have a plan for both. I'm going to buy assets. You just don't miss buying assets. If it's a good asset and it falls, it'll recover. But I also am prepared with insurance. So that can lead us to another important thing. Maybe that's in the second half. Is I talked about in the last podcast how that price dropped to where we were at 50 cents on the dollar price to tangible book on a bank, which price tangible book is a pretty good number for banks. It's not always a good number for other stocks. But as that dropped, I saw that, okay, but what about the insurance? We didn't talk about the insurance. So we could talk about how to insure that, leverage on leverage, very conservative, to be prepared.
Let's do that. Let's do this. Let's take that quick break because I am excited to get back. Volatility isn't something that professional investors avoid. It's something they prepare for. So when we come back, Andy's going to explain the actual tools investors use to profit from market volatility,
yes,
from option strategies to buying opportunities, and why preparation always beats prediction. And don't forget, go to stockcastbonus.com, grab your free investing resources. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad Stockcast. All right, Andy, so let's get practical here. So when markets become extremely volatile, what are sophisticated investors actually doing?
So there's this thing called insurance, and insurance companies have a pretty good pulse on risk. If you look at driving a car, they'll look at a 16-year-old kid who's driving a souped-up sports car that's red, and they're going to charge him more than the soccer mom that's in a blue minivan, right? It's just one driver's more volatile than the other driver. And so volatility drives premiums higher. Low volatility drives premiums lower. So think of it as insurance of health. I used to get these people calling to sell me health insurance, telemarketers. I'd say, well, I'm a cancer patient, which is true, I was. And my wife, she's fighting breast cancer. And so, the insurability, that's a bad bet for a lot of those guys, right? If you have health problems. So insurance really understands risk really, really well. Well, at the CBOE, the Chicago Board of Options Exchange, there's two pits. The two biggest pits are the SPX pit, where you just buy the S&P in an ETF type thing. And the second largest pit is called the VIX, the Volatility Index. What the Volatility Index does is it looks at puts on the S&P 500, basically. It says if people are afraid that the S&P would crash, they're going to buy a put, which gives them the option, hence the word option, choice. Gives them the right, the choice, no obligation, just the right, no obligation, just a choice, an option, to sell their stocks at a certain level. This is how Mark Cuban got rich on Yahoo stock. When it crashed, he had contracts that would allow him to sell it high. He had a guaranteed high that he could sell it at even if it was down low. That's how Cuban, made $1 zillion and bought the Mavericks, was off insurance, really. And so those insurance if you had insurance, you could even overinsure. So there's a movie called Trading Places. It's based off a true story called The Turtle Traders with Eddie Murphy and Dan Aykroyd, and it's on every Christmas on TNT. You can watch the kiddies version without all the bad stuff in it. But there's this scene where the Dukes are trying to convince Eddie that, this is your house. They've done the Trading Places. And Eddie says, oh, so this is my vase, son. He grabs a vase. He starts, I play like Metal Lock Lemon with this vase. He starts flipping the vase around. The vase hits the ground and crashes. And he goes, that's a fake vase, right? And the Dukes say, no, I think we paid $15,000 for it or something like that. And he says, yeah, but we insured it for like 30, so he just made 15 grand or whatever it was. So the insurance made them money because they overinsured. And Cuban says he overinsured. He said, 60 Minutes interview, I had insurance and then some, which tells me he was overinsured. So you have this VIX. Well, I can buy a call on the VIX. Now watch this. The VIX rises disproportionately to the market. So watch this. The market on the tariffs, we did this at the Cash Flow Academy, and Corey led this trade. When we saw the tariffs, talk of tariffs, Trump's going to saber rattle. The tariffs are never going to be what he promised or what he said, because he's using it as a negotiation tactic to intimidate other countries, which that's what a businessman would do, right? We have this weapon, we'll use it, give us our way. He's going to negotiate with it. So all this tariff talk, that can be scary for a market. If you're Dow Chemical and you have imports from all over the world, that you're going to freeze a factory. You're going to stop building because you don't know what your costs are going to be. So it's very scary for businesses, for certain types of businesses, for tariffs. So what Corey said is in that options pit, if the S&P falls 5%, the VIX is going to go up 200%, 300%, something like that. So a 5% in the S&P here causes a massive fear gauge. That's what they call it, the fear gauge. So this drops this far, the fear gauge goes this high. And that's human nature, right? We have alarms and false alarms all the time. It's human nature. Well, here's the other thing. So you have this huge leverage of a 5% drop here, triple-digit rise here. That's huge asymmetry. Then you have additional symmetry is that you have 100-to-1 leverage on the VIX. So we would look at the VIX in the teens when it's calm, everything's calm, and we buy a few option contracts on the VIX that cost us very little money, especially if we see storm clouds. Maybe we up our insurance a little bit. It's like saying, it's rain outside. I think I'll take my umbrella with me one day. I have to know how to use an umbrella. I have to know how to buy an umbrella. And if it doesn't rain, I took my umbrella and it was a pain in the neck. Or I bought an umbrella and I didn't need it. It's not devastating to pay premiums that are low because it's part of doing business. In other words, on my home, I have homeowners insurance, right? And it's just a cost of doing business, of being prudent, being prepared. Well, buying a low amount of options, a small amount at small prices, considering when you see storm clouds, a lot of times I buy those and I'm like, lost money. I've lost money on my homeowner's insurance every month for as long as I've owned a home. Because I haven't had much thievery and I haven't had much flood or fire or earthquake or whatever, right? I just haven't had damage to the home, but I've paid those premiums as a part of doing business and protecting something larger. Well, that's a triple digit return. because when you buy those, and the VIX is in the teens, all of a sudden the VIX hits 25 or even 30, those premiums explode in value. We can also do spreads. We can do a debit spread and reduce that cost further because we don't think the VIX is going to 90. So we can buy some calls here and sell some calls here for a debit spread. And this comes to the education, right? This isn't something that you're going to use every day. But if you see storm clouds and you see, there are rumors of tariffs, let's just go. We got a war in Ukraine starting. Let's see what happens. You don't want to do it when it's high. When it's already high, you're late to the party. You can't buy insurance when the house is on fire. Pound a sign in the front yard, say fire sale. Hurry up, it's going fast. Don't get to do that when it's on fire. So the preparation of learning how those instruments work and understanding how they're priced and understanding how those debit spreads can work before is important. Now, once you're in the middle of it, you're going to switch to probably some S&P 500 type stuff. And you're going to look at trades where you sell something to buy something to fund your insurance, because the insurance will be more expensive, but certainly worth having in those times. Now, what's nice about that is if you're sufficiently prepared, as the market drives, you're getting paid. Big. That's why it's an opportunity. You're getting paid, and then you're flush with cash when it's time to buy the assets low. So your insurance, I'll give you an example. I can't remember I used my homeowner's insurance one time. It wasn't even my homeowner's insurance. So check this out. I'm in a band, and when people can't afford a good band, they hire us instead. And it's just high school buddies, right? And I have all this equipment, PA, mixers, mics, my drum set, all this stuff. We have all this equipment, thousands and thousands of dollars in equipment, because we're not very good. We got to make it up with good equipment. And I had it in my buddy's garage, and we just stored it there. Well, he gets broken into, and someone steals all our equipment, and his homeowner's insurance is going to cover it. So we had all the receipts for what we'd bought, and inflation, everything, and upgrade stuff. The equipment we had for 5-6 years was no longer the best equipment. You couldn't buy it anymore. The insurance company actually paid for all new equipment. It probably cost double what we'd originally bought, and we got an upgrade in our equipment. Well, that's the same thing that happens when those VIX go up, or when any of these hedge trades pay off. You're flush with cash where you get to buy more asset, nice, clean, new low prices, and up you go again. So we developed this class. I'll put on my salesman hat and sell this class. About 3 years ago, we were looking at the markets, and we said, we should teach a SWAT team type of thing. Like my brother, he would train for those certain gunfights, and it's a different level of training. It's not the day-to-day cash flow that I do. It's different. It's being prepared. And I kind of like SWAT, special weapons and tactics. I like that SWAT. And I said, let's do a class called Armor. And Armor stands for Advanced Risk Management Opportunity Readiness. That's what Armor stands for. Advanced Risk Management, not basic. Not the basic stuff we do today. This is Advanced Risk Management Opportunity Readiness. So I don't know what the Schiller will do. We might have, I think we're going to break a new high in it. I think we're going to beat that 2000, where we'll be paying more for stocks than ever, because the upside of A&I is so big that it can bring in some irrational exuberance. I'm going to participate in that. I am. I want to grow. I don't want to miss out on that stuff. I got FOMO, but I also know how to insure. And so I'm going to buy the home, but I'm going to buy the insurance in case it burns to the ground first. The ideal scenario, which could happen, which I would love, is we need a little bit of an initial bubble burst to wipe out some guys that are over leveraging and over betting, because that's what happens. Guys over leverage to take advantage. Tide goes out a little bit and they get caught. It's like Buffett says, that's who you find out who's swimming naked. that would be the perfect scenario, to have a nice little bubble pop, an AI bubble pop, clean everything out, drop prices, fill yourself with cash, and then you buy in, you get another chance to buy in low. That would be the best scenario. I don't know if it's going to happen, but I'd be prepared for it. The amount of debt we have fiscally, the wars that we have, the price of oil, inflation, the debt, and particularly the Shiller PE being close to all-time highs, these are storm clouds for sure. These are headwinds, but we also have tailwinds of AI, and they're fighting each other. So it could go, we could have some volatility either way. Let's get educated. Let's get our temperament right. Let's get prepared for what could be, life-changing opportunities. Advanced risk management, opportunity readiness. It's not the class I use every day. It's the class I'll use 5 times in my life, but those 5 times are the most important 5 times.
That's huge. Where can someone go to start learning these same risk management, armor, cash flow strategies that you've been teaching?
I don't have a link for armor. It's a preview of, it's kind of a learning what you would need to learn. So we have a little armor preview. We can have people see where they learn what they're going to learn. And then we have the armor course, which is, takes about probably 10 hours. It's probably 10 hours of training. So it's like going in and having that weapons training, that's what it is. But you'd have to reach out to us personally on that. Send us an email, find the Cashflow Academy, find a support link or something. Say, hey, I'm really interested in your armor class. You could do that. Tell us you mentioned the podcast, so we know where you came from and why you're interested in it. But for free, you can go to cashflowbonus.com. We don't have armor training there, but we do begin with the basic financial education. That's where you start learning the day-to-day cash flow. Let's get some cash flow day-to-day. How do you create an income stream that's pretty stable and just pays you every month, not at a job? That's really important cash flow to have. So, either of those are great options. Reach out to us and say, I'm really interested in the armor class. Or you can say, hey, I want to go to stockcastbonus.com and what free stuff is there? And you can just go there and sign up for that for free.
Beautiful. Love it. Andy, thank you so much. Listeners, every market crisis creates 2 groups of people, those who react and those who prepare. The investors who build lasting wealth aren't fearless. They're just educated. They understand that volatility is part of investing, not the end of investing. And again, huge thank you to Andy Tanner for showing us how experienced investors think when everyone else gets emotional. If you want to learn the same investing principles that help professionals navigate uncertain markets, head over to stockcastbonus.com right now. You'll find free tools and resources designed to help you to build confidence in every market environment. Now, if you've enjoyed today's episode, part 2 and part 1, make sure you like it, subscribe, share it with someone who gets nervous every time the market gets a little bit crazy. Thanks for listening to Rich Dad Stockcast. I'm Denney. Stay smart, stay invested, and we'll see you next time.
This podcast is a presentation of Rich Dad Media Network.